Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center in Louisville. Discover no-cost, valuable business services to help you thrive, whether starting your entrepreneurial journey or scaling your existing business. We have the resources and expertise to help you succeed. For more information, please visit our website or text 502-977-5800. Thank you for joining us today. Feel free to use the chat feature to ask questions or engage with our speaker. Let's get started.
Oh my gosh. Well, hey, welcome everybody. I'm Dave Etkin. I'm the director of the Louisville Small Business Development Center. And I can't get my video on. Oh, geez. All right.
You just keep talking, Dave.
Okay.
Welcome everybody. Welcome.
Oh my gosh. This has never happened before. Anyway, so yeah, I'm your host tonight, and I'm thrilled to have everybody here with us tonight. We have a lot going on and a lot of great experts with us to really kind of share some great information. So just to make sure that you can actually see me and you can hear me, because there we go. Because it seems like we're starting off really well tonight. If you look at the bottom of your screen there, you should be able to see your toolbar. If you're not, just hover over the bottom of it there. It should pop up, and there you'll see the little chat feature. If you wouldn't mind, just to make sure that you're out there, if you would just put your name and where you're joining from, and that you can hear and see me okay. So I'm here in Louisville, Kentucky. It's a moderately beautiful day outside. There's Hermelin from Frankfurt. Good to see you. Janet's checking in from Salzburg. I forgot to say hello, Janet. Janet is my coworker and good friend driving the ship for us today. Hello, Janet.
Good evening. It was so nice today that I went to the park with the dog today. So beautiful. It could be that way tomorrow, but
yeah,
beautiful day today.
Hopefully. Hey, Candace, Bowling Green, Heather from Louisville, Will from Knox. Awesome. Awesome. I got a bunch of folks coming in here. So just as we go through everything tonight, we'll just put in if you have any questions or comments, we'll put them in the chat here. But you know what, starting or growing a business has a bunch of challenges, and probably the number one is funding. So tonight, hopefully we can kind of demystify a lot of that process and kind of give you some good things to take away. We brought together an exceptional panel of experts, and they're going to share their knowledge and answer your questions and help you navigate the world of small business financing. So if you have some specific things you want to talk about, make sure you put them in the chat so we can ask our experts. So the good thing about Louisville is we are kind of have an ecosystem of lenders and service providers like the Small Business Development Center, like my team and I. And these folks here work closely with all of us, and we work together great. So let me introduce our panelists tonight. First, Jenny Trent from U.S. Bank, and she brings a lot of good stuff from the traditional bank. I was saying earlier that larger traditional banks usually don't have a lot of solutions for very small businesses, but U.S. Bank has came up with a lot of cool stuff, and Jenny is the expert on that. I'm glad she's here with us. We also have Jamie Keith from L Home and Tracy Span, Tracy's from Community Ventures. They're both CDFIs, that's Community Development Finance Institutions. These are organizations, financing organizations that are really committed to supporting small business through kind of mission-driven lending, a little bit different flavor, but all this stuff kind of fits together. So as we get going here, we'll explore the key difference between the traditional banks and the CDFIs, and everyone can talk about what they're looking for in an application and share practical tips to make you through your funding journey. So I really encourage you guys to make the most of this, to use the chat feature, submit your questions. If you have specific questions on your situation, do it. Why not? They're all here and they want to answer your questions for you. So don't feel shy. So let's dive in. So I'm going to ask each of the panelists to kind of pop on and briefly introduce themselves and tell a little bit about their organization. So Jenny, are you out there? You want to pop in and say hello? There you are.
I am here.
All right.
Thank you so much, everybody, for joining us. And thank you, Dave, for having me. I am the business specialist here at US Bank. I know I only have a couple of short minutes, but I'm going to share my screen. Visuals usually helps me. Dave, can you see my screen?
Looking great.
Perfect. Okay. My contact is there. So, like Dave said, a lot of the bigger banks, they tend to have a reputation of banking already established businesses, having very few options for startup. US Bank is not like that. In fact, my role is specifically dedicated to helping all businesses. I have customers that come to me complete startup or even with an idea of starting business. And I also help the established businesses. They've already been in business for 10 years, 20 years, whatever it be. I'm here as a partner to support you all. And a big thing that US Bank does is we back everything that we say. I know every bank claims to help small businesses. We act behind there. We have a lot of products specifically for your startups. Business Essentials being the biggest one. This is your first checking account for your business. We understand this is new to you and we want to make it as simple as possible. So we offer not only a free checking, it also comes with a free card reader for you to start accepting your payments. You'll see a lot of free and no fees in a lot of what I'm going to show. As your business grows too, we know not one account fits all. We have 3 other accounts that will grow with you as your business grows. Another big thing that people come to US Bank for is our diversity lending. This is US Bank saying, hey, historically, we know people of color, women, veterans have a very hard time getting lending. And we want to step up and say, hey, we recognize that. In fact, not only do we recognize it, we want to change it. What we do is if you fit in any of those categories and you own at least 51% of your business, our underwriters are specifically told to calm down. Whatever strict rule we have, whatever ratio that they calculate by, we drop it just to make sure that you all have an opportunity to grow. For lending in particular too, a lot of our startup businesses, lending is hard. We understand that. You can't start a business and outright want to borrow, $100,000. But we don't tell you, I just don't tell you no and send you off. I want to get you there. And we have options here at US Bank. I myself also, once I understand your situation, will reach out to partners like Tracy and Jamie to say, hey, here's what we have going on. I think you can help them better than I can right now. And we work as a complete unit. You're not getting passed off. You have a board of directors essentially at multiple institutions to help you. And that's something that I take huge pride on. This is why I joined the SPDC. This is why I go to networking events so that I can provide you all with options. I'm going to just briefly go over SBA Express because I don't have a lot of time, but if you are concerned about your time in business, having a high-risk industry, or just not really having enough collateral yet, we have specific loans called SBA Startups or SBA Express to help get you started. And if you have any questions, please reach out to me. The last thing I'm going to jump into, this is usually where I'll start a lot of my clients. We have one of the best no interest cards out there for your business. It's 18 months, 0 interest on this card. There is also 0 annual fees. This is what gets a lot of business owners started, buying your computers, your equipment, whatever you need until you reach that tenure. I believe that is my time. I won't take too much more from everybody else, but please ask me any questions. later. I appreciate you joining, and that's my time.
Thank you. All right. Jamie, want to pop on for a minute? Say hello.
Good afternoon, or I should say evening, everyone. My name is Jamie Keith, and I am with L Home CDFI. And I know that Dave mentioned it earlier. We do things just a little different. So if you think about the fact that you've either started a business or maybe you're getting ready to start the business, how about that? You're in what we call ideation, or you're in the throes of business and you feel like, I'd like to make a pivot or I'd like to expand my business. You can give us a call. Every now and then, we do have clients that are unable to make things work at the bank, but we do consider ourselves a wonderful first step, even maybe prior to looking at the bank, just to make sure that you not only get the funding that you may need for your business, but also some tutelage along the way. The way we do it at Our Home, we work with you through our coaches, and the coaches will make sure that you have everything that you need to not only potentially get the funding that you need, but more importantly, sustain your business. So every good business has some kind of business plan. And if you don't have one, don't panic. We can help you with an outline of one or have one of our partners like Davok. And by the way, I want to thank you all for inviting me to participate this evening. SBDC is like one of our sister organizations in what we call the ecosystem of small businesses development and sustainability in the city. So you could work with them to kind of get some things together for your business plan, also with getting your numbers together, because a lot of times it's a simple question. Are you going to be able to pay this money back, whether you go to a CDFI, a bank, or even a family member, right? So at the end of the day, we want to help you understand the financials that go into making your business and making it successful. We will also help you through the application process. And our end goal is to also help you, if you so choose later on, and you need more funding or you want to do something larger, to be able to go to the bank, because we will help make sure that the rescheduling of payments and things that have to do with growing your business are going to make you be in a really good position for that down the road. Sometimes it's a simple case of you have met everything but one criteria. Sometimes it's because your business is too new. And so new to the bank is not the same as new to us. New can be brand spanking new. And that's okay. I won't belabor the point because one of my other sisters in the business is also another CDFI. Tracy's going to talk, excuse me. Yeah, I'm right. Tracy's going to talk to you in just a second about what we do in another one of our CDFIs. So I'm going to let her take over if that's all right, because we have very similar missions, and that is to help you grow, but also sustain. Thanks so much, Dave.
Thanks, Jamie. Hey, Tracy.
Hello
There you are.
there. Well, Jamie, thank you very much. I appreciate that. And welcome, everybody. I'm so glad to have you guys here. My name is Tracy Spann, and I am with Community Ventures. Community Ventures is actually outside of Lexington, Kentucky, but I'm here in Louisville, Kentucky. So the great thing is Community Ventures is all over the state. So for those of you who are outside of Louisville specifically, I heard Bowling Green, Frankfort. We also have CDFIs in those areas as well, and specifically Community Ventures. So like Jamie said, we are both CDFIs. And again, that just is a simple community development financial institution. So how that makes us different from Jenny at US Bank, whereas Jenny and US Bank, they're more traditional lending. CDFIs can be a little bit more non-traditional. So for those of you who may be just starting up your business, whether you have registered with the Kentucky Secretary of State and you have already opened up your checking account, or maybe you don't even have your name picked out. We do startup, we do operating capital, and we do expansion capital. We start as low as 500. We go all the way up to 50,000. We are federally backed. So our loans are federally backed through the SBA. And so what that means is that oftentimes the interest rates are just a little bit lower than what you might typically find out in the city. As you talk to different institutions, the interest rates can be a little lower because it's through the SBA. Now, as I mentioned, they are federally backed. So what does that mean? That just simply means that even though you will enter into a loan agreement with Community Ventures, the money that you are receiving is from the United States federal government. So that means if you do not pay this loan back, you default to the federal government. And if you do that, it can make your future financial plans very challenging, whether you want to buy a house or an automobile or even take out another loan. So the great thing is that, and I'm pretty sure Jamie's going to say the same thing, as long as you communicate with us and talk to us and make sure that we know the situation that's keeping you from being able to make your payment, oftentimes there are things we can do to work with you. So that's another added advantage to working with the CDFI. Also, I will tell you this, when you're working with a CDFI, typically, at least with Community Ventures, we will be using your personal credit. So any loan that you would utilize for your business would be under your business name. However, your credit is going to be based off your personal credit. Now, the good thing is that that's also going to help increase your credit score if you're struggling with that a bit. And it also builds up a relationship with us. So if we have to start with a smaller loan, maybe because your credit isn't exactly where it needs to be, then once you have been into that loan for at least 6 months, we can go back, we can look at your credit again and see if we've been able to pull your credit up some. And then what we can do is we can look at doing a larger loan. So I think I've kind of just touched on some of the basics, lots more information. I just don't want to info overload you guys. And so I do know that Dave's going to, open it up for questions earlier. So as I spoke and Jamie spoke, and even Jenny, if you guys were thinking, oh, I want to ask a question, just remember what Dave said. Start jotting them down, and then we can all address your questions.
Yeah.
But just as a quick intro, that's what Community Ventures is all about. And I look forward to Dave being able to talk in more detail about questions you guys might have and how we can help you all.
Yeah. So, Jamie, Jenny, why don't you guys pop on so that everybody can see you? Don't hide back there. And so everybody out there, if you have any questions or, now's the time to ask. This is what we're here for, is just to kind of let you guys ask the questions. But since I've got the microphone, I'll ask the first question. How about that? So I know everybody has interesting stories, but Jamie, can you share a story about a small business or a startup we work with that really succeeded in securing some funding, and what kind of made them stand out?
Ooh, I've got a few of those. So let me think real quick in my Rolodex of memories. I've got one about a really big pivot growth, and actually 2 of those. And then let me think about a starter. I tell you what, I'm gonna tell you about one that's kind of a hybrid. So I don't know how familiar you all are with uh, lemonades, because there's a few lemonade businesses going on around here. But there's a young lady by the name of Tiffany Adams, who has a wonderful, hers is actually called a Miracle Lemonade, all in one word. And she can be found a lot of the time on either the waterfront in the summer or year round as part of the refreshments at the oh, forgive me, I was going to say Slugger Field. Yeah, I'm right, Slugger Field. And with the soccer team too. I apologize, you all. I've got a lot of stuff swimming around in here. But anywho, she came to us because she had done her lemonade. She had been doing pop-ups, and she was doing pretty good with the pop-up world, right? And his lemonades are really good. Take a sugarholic like me, I love it. All kind of flavors, but she needed monies to expand so that she would be in a good place to have this lemonade, not just periodically for pop-ups and not just periodically as she was requested to provide it here and there, like at Sluggerfield or on the waterfront. And so she now has a full-blown contract year-round with Lou City. And that is because we were able to get her the funding so that she was able to have a permanent station. And what turned into one station has blossomed all around the whole park. You have to really see it to believe it. And she's really part of that fabric now. And that was because of the opportunity. She was prepared. And I will say that, and we can get into that later about the different types of preparation. But she was ready and serious about what she needed to do, very pointed. And our loans can range anywhere between 1,500 to 150,000. So that's a lot of playing field there. And if people need more than that, then we can partner with our banks to do that. But in her particular case, she did need a substantial amount to really make the dent. And that's one of the things that I love about what we do at El Home is we meet you where you are and help you get where you're trying to go. As a matter of fact, that's kind of like our mantra that we use. So that's one of the first stories. I've got several, but I'll just share that one because that's one you can see all the time.
All right. Yeah. Wow. So here's a great one. From Candace, what mistakes do small business owners commonly make when seeking funding, and how can she avoid those? Jenny, why don't you take that one? Because I'm interested in what you got to say about the traditional banking. Because I see a lot of entrepreneurs and they have a great idea, and then when they show up in the bank, it's just like total deflating ego and stuff. So what do you see?
Yes. I'm glad you called me on this one because I do see it a lot. And as soon as the conversation starts, I know I'm going right into collateral damage, making sure that they don't feel defeated. But a big thing that I see with our business owners is coming into a meeting expecting a large loan without just justification for it. And it doesn't have to be super lengthy, but the math has to make sense, especially if you are thinking about how an underwriter thinks. All they're going to look at is numbers. They're going to look at, hey, if anything were to happen to your business, if you stop getting income, what's going to happen to this loan? Because we don't want to send anybody into collections or bankruptcy. Lots of times we don't get a lot of that collateral back. So the underwriter, whenever they're looking at loan applications, with us in particular, we need to know that all of your debt, including this loan, won't exceed 50% of your income, which means at any time you still have the remaining 50 of your income just to live life. And if you have extra to pay towards the loan, that's fantastic. But look at those numbers whenever you are looking at the amount you're asking for. What's your income? What's your business projection? If it's brand new as well, you want to be extremely conservative with how much the business makes because you want to plan for your rainy day too. If, things happen, weather happens, would you be able to pay 2 months, 3 months of all of your business bills and your own personal bills? That's a big thing that I would have you all reflect on. And of course, find your business advisor, whoever they be, talk to them. Everybody at the SBDC is fantastic at breaking down your finances, your structure, giving you a financial plan. Utilize them as a resource. They help tremendously because after I have the conversation, that's where I send my clients straight to.
Yeah. We got a great question from Tasha, but I'm going to hang on to that one for just a second because I want to ask Tracy first, how should an entrepreneur determine how much funding they need, especially on a startup? What's the best approach?
When you are looking at a startup, of course, I'm going to be honest, the first thing, if you come to me and you have an idea, but you don't have your business plan yet, you're not really sure what your overhead is going to be, the first thing that I'm going to do is I'm going to connect you with a business coach because there is nothing more important than connecting yourself with someone who has been there, done that. And it doesn't necessarily mean that they had to know exactly what you're doing. They just need to be able to communicate with you and have you be able to regurgitate everything you possibly can. So I would say the first time that I have a meeting with anybody that's looking for any type of financial assistance, the first thing we're going to do is we're going to discuss your business plan. And if you don't have a business plan, then that's where we're going to start. Because without a business plan and pro forma statements, which pro forma statements is another word for cash flow projections, which if you're a new business and you don't have those, you're not going to qualify for any type of financial assistance. Those are the main thing that you absolutely must have when you're applying for a loan. Because if you're a startup, then the bank wants to know, okay, based off your startup, how much do you think you're going to make the first year? And then that second year. So typically we want to see at least 2 years. And that's on any type of loan over $10,000. We're a little bit different at Community Ventures, like I said. We still want you to be able to tell us what your projections are. But at that point, we really, if it's under 10,000, we're looking more for 12 months worth of projections. So in a long way to answer that question, you always want to have a coach. You always want to have a business plan. And if you don't have a business plan, Jamie mentioned it earlier, we also have what's called business plan outlines. And it's about 3 to 4 pages. And you just kind of go through and you fill in the blanks. And as the business owner, you should have zero issues with any of these questions, especially if you're already to the point where you're thinking about financing, you just don't have your business plan. So if you take this business plan outline and you're struggling to answer those questions, then we need to sit down and strategically discuss what you think your business is and where you need it to be.
Mhm. Nice. All right, Tasha's got, she's just throwing it all out there. So Tasha wants to buy a business. And she, so I think everybody can read that. But I think we, you know, I'm just going to throw it out to you guys. You know, she wants to buy the donut business. I think I go to that place every Tuesday morning, actually. So who wants to weigh in first on this? What would they tell Tasha to do? What would you tell Tasha to do? What's her next step?
Hey, Tasha, I was reading this. I'm speed reading, and I also don't have my glasses on, but I think I can pretty much have the gist of it. So it sounds like this business isn't doing bad. I'm going to hope maybe this person just wants to retire. But in any case, even though you may have, and I'm glad that you mentioned it in here, you have some information about this gentleman's revenue from the business, and you do want to have some tangible evidence that he's willing to share with you, to share with us or whoever the lender would be. And then you also need to be able to qualify yourself, because even though you're looking at taking on someone else's established business, we need to know what you as an entrepreneur are going to bring to the table and what you may have to offer as well. So typically, the startup that we would do for someone when they are just like brand spanking new with a loan could be up to 15,000 for a brand new business, but this one is established, and so therefore the parameters would open a bit. But you would have to be able to assert your capacity as an entrepreneur into what your plan is for the business. He may have an existing business plan, and if you want to get that from him and tweak it to suit what you see going, say for example, the day you take over, how are you going to operate, as well as what your projections would be for the following year. And I would say year out from the date of acquisition, somewhere in that neighborhood, along with having those prior sales. Because again, it becomes an issue. It's wonderful and altruistic as everyone's desires are to help you, that we're able to see that you're able to repay the loan. And that's pretty much what Jenny was getting at earlier. One of the things I always tell people when it comes to being insistent or making it clear that yes, it is a loan, is because there are others in line behind you. And so we want to be able to spin that back out there behind you, and even in the midst of you paying yours back to someone that's behind you that really needs a leg up to get their business going as well. Now, the other other thing that I would suggest is that while you're looking at that, that you would also have done your own kind of inspection to make sure. I noticed that you did pad the amount that you're requesting, but I hope within that pad, there's room for what we would call working capital. So you have a little latitude in meeting needs and or the rainy day or unexpected things that may go on with the business, but you do want to make sure that it is in the best shape, equipment is in the best shape that it could possibly be in. And I don't know if they have employees or not here, but is that another thing that you're looking at? Are you going to start over? You're going to be there 24 hours a day, or going to have someone there with you? Those are the things that a coach would go over with you to ensure that you've got a really tight, solid plan before we move over into looking at pulling that kind of money out to make sure that it's going to be a good fit for you. It could be that in the assessment that you might need a little bit more than that, or maybe even a little bit less, but we want to fine tune it to make sure you get what you need.
Yeah.
And to piggyback off of Jamie a little, and she explained it perfectly. I know that if I had this deal and brought it back to my team, one of the first questions they're going to ask is, what's the industry experience? Do you have any industry experience? Have you worked in, restaurant sales? Have you managed for at least 5 years, especially if there's no collateral? The next step is, yes, go talk to your SDBC team. They will build your projection for you to kind of give you an idea of like, hey, this is what the next 3 years is going to look like for you whenever you buy this. And another big thing is whenever you're doing a business acquisition, it's going to be very similar to purchasing a home too. One of the questions you're going to get asked is, what's your cash flow looking like, of course, and down payment? What does that look like for this business?
Yeah.
I would also find out if Mr. Ling is willing to allow you to look at his previous 2 years of cash flow statements. If he is seriously considering selling his business, I would think that he would be willing to do that. Not his tax returns. You don't, not, I'm not talking about his tax returns. I'm just talking about his cash flow statements, which will tell you within that statement, it's going to talk about what his revenues were. I mean, it'll break it all down for you. And if he doesn't want to give you a cash flow, if he doesn't want to give you cash flow statements, ask him if he will give you a balance sheet for December 2024 and December 2023.
Yeah. I would also say, Tasha, can you get up really early? Because I know Mr. Ling opens at 5 because I'm there at 5:05 on Tuesdays. So if you can do that, that's a tough one. So yeah, that's some great information. I really appreciate you guys sharing that. And I think that the number one message though, before you okay, good, Tasha. I think that the big message from all three of our panelists is that you have to be prepared. You have to understand what you're asking for, what you're going to pay for, and be able to convince these three finance experts this is a good idea for you and them. I think that's the deal. So appreciate you sharing that. It's pretty brave. Why don't you reach out to one of us, and we'd be happy to help you make get things going. So yeah. Jenny, what in a traditional bank, what industries or types of business are you most likely to approve funding for? Are there some things that are harder, or what do you think?
I will say right now, or actually the last 3 years since COVID, restaurants and trucking have been extremely difficult. Just last year, they've been put on a no lending list for us just because of the loss that was taken. Very unfortunate. But construction, we love construction. We love any businesses that have collateral because we don't want to go after all of your business asset. And specifically for lending, if your business have great collateral, push comes to shove, if we have to, we'll repossess the collateral as opposed to sending anybody to bankruptcy or charging off that loan.
Yeah. Nice. I think too, we ought to maybe clear up a couple things. Jamie, would you maybe talk a little bit about what how a CDFI differs from like a traditional bank?
Absolutely. The easiest way for me to do that is kind of like, and I get tickled because sometimes when I've done these discussions, it sounds like I'm trying to beat the bank up. I'm certainly not. What I will say is that banking is um, really a for-profit business. And so we have to think of it that way. And their business and service is money transactions, where with a CDFI, we are a nonprofit. So our goal is to stay afloat, obviously, so that we can continue doing the work that we do. And what I always like to tell people in the easiest way to think about a CDFI as a lender is that our focus is both social services and banking, kind of had a baby and a CDFI was born. So with that in mind, some of the differences, and this is the things that sometimes, and we have friends in the bank, all of the local banks we have a contact with, they've reached out to us like, I really love this person, I really love this business, but I can't service them because fill in the blank. So typical reasons that we run into people that are wanting to or have been referred to a CDFI versus the bank are credit scores. And for the credit score question, we have two different answers for that. One is that the traditional, and correct me if I'm wrong, Jenny, and I know that may vary from bank to bank, but typically the credit score minimum for banks is 650 to 700. At El Home, it's 525.
Mm,
Excuse me, 540. It's a huge difference right there, okay? Because we
yeah,
know things happen. Also, we do have a concentration, not limited to, but a concentration on the BIPOC community, which are Blacks, Indigenous people, people of color. Well, I'm also going to put women in that category because a lot of times it's just not a fair shake. A lot of times it's
right.
no shade to you, Dave, but it's a good old boys club, and it's just hard for the rest of us to get in sometimes. But we still, like any other resource, we have Daves around us all over the place, and because of that, we're able to do what we do. But we're just trying to even the playing field. So sometimes there are things that are, I would say, credit-wise indigenous to those communities that I just mentioned that are not always the norm. Okay, so we kind of build our um, eligibility criteria around that.
Mm,
So the other thing that sometimes the banks are not able to lend money to small business for is because the business is too new. And banks say we lend a new business all the time and they mean it, but new in the world of banking is 2 to 3 years old. New to us is brand spanking new. And so we will work with you because you have to have seed money to get started. We get it. We want to help you in that capacity. Another blockade every now and then for the banking industry might be the length of time between you having a bankruptcy and the eligibility to look into credit. Our window is 3 years, and we feel like it's a really good number because in 3 years, if you filed bankruptcy 3 years ago, you've had plenty of time to build some good credit, some solid credit, whether it could be one credit card that you've obtained, it could be that if a credit report is pulled, then we can see consistency in repayment, whether it is for utilities or a mortgage or rent. And one thing I would encourage is that when you are in a situation where it's not a mortgage or maybe you don't have a credit card, if you're paying somebody consistently month to month for any length of time, whether it's 12 months, 6 months, what have you, ask them if they could make that report to you. If they would, are they reporting to a credit bureau so that you can build that credit? Okay. If you're still on
mhm,
the comeback trail and things get a little shaky for you, then you may not want to do that, but I would suggest that you look into getting that done. Also, one other tip I'm going to give you when it comes to credit is if you have a bill that's always due like the 10th of the month and you know you get paid on the 15th of the month, call them. I promise you, they want to help more than you think. Ask them if they'll move that date to the date that works for you so that you can always be on time. Okay, that's something else you might want to do. It's all about records and behavior. And another answer to that is that we also have what we call a credit-based or character-based, excuse me, loan. So we don't use the credit score at all. We look at credit behavior. So yes, we will pull a credit report, but we're not looking at it for the purposes of a score. We're looking at credit behavior. Again, you reestablishing yourself. And that can be helpful to those that may have had some, credit issues in the past, but not the bankruptcy now. We can't get past the bankruptcy piece, but other things that may have been a deterrent to you. If we see you on the comeback trail, then and we see that maybe you've had an increase in your income, or you're having an opportunity that you just haven't had before and things are looking really good, we will work with you. Outside of those two things, I think that we're pretty much like the bank, but again, some of the numbers games when it comes to the bar that is set by traditional banks, we've lowered some of those bars to accommodate.
Yeah,
Mhm.
cool. Thank you.
Mhm.
So on that note, Tracy, what do small business owners need to know about like microloans, and how can they benefit them?
Yes, small business owners, and typically, just to clarify, when I'm speaking small business, Community Ventures does $500 up to 50,000. Now we can partner. We have partnered with We've actually partnered with El Home. We have partnered with Metco. We have partnered with Park Community. And when I say partner, what I mean is I've had a client who needed 60,000. Well, I can only do 50. So what we did was we did 50 through us, and then we partnered with Park Community and got another 10 that way. So Park Community is another bank. They are a nonprofit, so they're not quite like us as a CDFI, and they're not quite like US Bank. That's about all I can say to them. However, when you are looking at microlending, typically you're looking at a loan 50,000 or less. And don't get me wrong, I don't have $50,000 just hanging out. So I'm not saying that that's a small amount of money. But when you're looking at a small business loan, $50,000 can be quite smaller. So with micro lending, like I said, we have 500 to 10,000, and that is a loan that I myself can underwrite. So I will ask for your documents, and those documents are typically going to look something like this. You're going to have to fill out the application. If you don't have a business plan, you'll have to have the business plan outline. We'll have to have a copy of your driver's license. We'll have to have your latest tax returns. So, as we know, right now, we're kind of in that strange situation between January and April. And if you're already a business owner, you might file an extension and not even file until October. So you might be thinking, okay, well, if I haven't even filed my 2024 taxes, what does that mean to me? It's okay. What you're going to do, you're just going to submit your 2023 tax return. You're also going to let me see all of your W-2s. If you are already in business, then and you have filed a Schedule C and maybe you're paying quarterly, then we can look at it that way. If you're filing a Schedule C and you still haven't filed your taxes because you file it at the same time that you do your personal taxes, that's okay too. What we will do is we will either look at your total revenues, and as a small business, even if you haven't filed taxes, you should be keeping up with all of your revenues. So we'll look at that. We will also take a look at your checking account. So if you have a business checking account, we're going to look at your previous 2 to 3 months worth of statements, and we're also going to look at your personal account. And we will take a look at that as well. For anything under 10,000, that's pretty much the documentation we need. Now, we are also what's called collateralized loans. So from 500 up to 2,500, you do not have to have collateral. Those can be what's called a signature loan. Anything over 2,500 requires collateral, which just means you just have to have some skin in the game. So collateral can look like an automobile. a boat, a four-wheeler, anything that you register through the state. So if you go into, Bobby Host Law and you write out your check, anything that you have to pay taxes on or registration, we can look at that as collateral. We can also look at your home. Typically, if it's under 20,000, I don't recommend the use of your home just because if you have other options, it'll be less of an expense for you. So that's kind of how the microloan program works. If it's above 10,000, from 10,000 to 50,000, there are a few more documents that we need. I don't want to throw all that information out there because I don't want to get too in the weeds, meaning I don't want to throw too much information that you don't need. If you feel like a loan above 10,000 but less than 50 is something that you need, then just make sure you reach out to me and we can talk about all the intricate details in more detail.
Yeah. Thank you. I'm glad you mentioned getting in the weeds because I have another in the weeds question. This is a specific one. So here it goes. I am looking to purchase a retail business of 35 years. I'm looking to do an asset purchase, and the main thing I am having trouble with is presenting inventory value to get a loan to purchase the inventory. I present what we have in inventory and there's details on it. So I want to do 90,000 loan just for the inventory. And they seem to only loan 40% of that, or maybe even 50% as, I guess, as collateral value.
Yeah.
What can I do to get a loan for 90,000 instead of just a small percentage of that? So who wants to take a stab at that one? I'm glad you guys are asking these hard questions too.
Well, if you came to Community Ventures, I would probably have to send you to Jamie because I only do 50. So that's where the challenge comes. Or this is one of those times where Jamie and I work together and I do 40, she does 40, or she does 50, I do 40, or, we try, or maybe she does 50 and I do 10. But I could work with you. However, it would involve bringing someone else to the table to help us meet your financial need.
Mhm.
And I think
When I was listening to that, I was thinking about another situation that we had, and it worked out very well for our client. And they actually took over a business, very kind of similar to the situation with these donuts here. But it involved the willingness of the prior owner. They were wanting to retire. This person had been managing the store and doing a very good job and was interested in taking over. And they had inventory and everything that they bought as well. So, what I would suggest is when it comes to the inventory, I'm not sure who did the appraisal or what have you, loan to value ratios for you, but I would do two things there. If you were coming to L Home, we would want to see how that was assessed, and then we would look at that as well internally. If in fact it still sits in the 40 to 50 range, we still would be able to work with you on that. If push comes to shove, depending on the and I'm kind of like Tracy on this. I don't want to get too far into the weeds. And one thing I will also say is that sometimes, well, not sometimes, but many times with our loans, it's a very individual thing. Very individual thing. So as I say these blanket statements, please know that once you get into the actuality, there may be a little bit more specificity, possibly depending on the real deal, right? Because we're talking in generalities here. However, I would suggest that first of all, we don't always kind of like some of the special programs when it comes to home loans. You don't have to have 100% value. We would do 100%, or you could have 80% ratio there. So even in thinking with it as low as 40, we may still be able to work with those numbers if in fact that's what it actually is. Or if push comes to shove, then we might suggest that you have a collateral as well. Because even though you're wanting to get the money to have the apparel purchase and it can be used as collateral, what is your investment in that? Because in a way, there is investment on your end, but you're investing the items that you're getting. So it almost looks like a charge, if you will. So there may be a request for you to have some other piece of collateral. And I'm real big on people, please, whatever you do, if you can avoid your home, please do. It's just uncomfortable. Nobody wants you to put your home on the dotted line if you can help it. I'd much rather see a jalopy than a home. But if you have some other form of collateral that could be used, it could even be, if you're looking at things, it could be a piece of equipment maybe that's even in the store itself. I'm not sure. Now, forgive me, Dave, for being a little fuzzy, but I couldn't remember off the top of my head if they're looking at getting the business and they're using just the apparel as the collateral or potential collateral, or are they only wanting apparel? Is somebody trying to shut down and you
Yeah.
just want the stuff and things? Is that what it is?
Yeah. I think they're just buying the assets.
Okay.
So it'd be the inventory and probably some,
Some other
like-
residual pieces. So yeah, I will look at the equipment to see if you can barter with that as well, and or be prepared for the possibility of needing to add some other form of collateral. And
Yeah.
that's still with the traditional things that I mentioned earlier. And Tracy and Jenny also spoke about those things as well. Some of the other qualifiers about the business in and of itself, because surely you're not buying all this apparel just to have. So what are you going to do? What are your business experience and what is your plan going
Yeah.
forward with it? Because it's got to make sense. It's got to make sense at the end of the day.
Mhm.
Yeah,
And I would
and
like
similar, you're going to hear a lot of disclosures from all of us because every situation is going to be case for case. But this is where traditional banking has its advantage. At US Bank, we can do up to 100,000 unsecured, but we are going to really look at, hey, does the math make sense? So as the buyer, first thing we're going to check is your credit. Next thing we're going to check is your personal income and any other business income, just to make sure you support the loan. And although we do have higher lending limits unsecured, we are extremely strict on credit, and being strict on credit allows us to lend these high unsecured amount because we don't want to take these risks. Oftentimes you might have to get creative. Tracy mentioned having to mix it with Jamie, and we've done similar situations like that too. If the collateral isn't enough, I've done combining loans with lines of credit, loans with no interest cards. Sit down and talk to your banker, tell us your story. We'll help figure out a solution and
Freezing up a little bit there, Jen. Dang.
pardon me, that seems to happen a lot. I don't know, but
You're just
it
getting
is
to the good
extremely
part.
windy. It's every time the tree blows, everything flickers. But yes, talk to your bankers, talk to your SBDC team, paint a good picture, and then go to your banks, go to your CDFIs.
Mhm.
They will present you your options, and I always recommend check out your options. I myself don't bank at one place. I don't recommend anybody do either. Keep your options open.
Yeah, that's great advice. Just one other thing I would add on top of it, I would see about baking in a little bit of a seller's note too. That might take some of the pressure off. Sometimes lending institutions don't like to partner up with that, a seller's note on the side. So, but just other things to do, you can. So thank you guys. That was great stuff. And I really appreciate the really specific questions. And I have one more just like that, not as big, but what is your current loan rate for an agritourism business, possession of land, and new construction of a farm stay? And what would be the required down payment for an 800? Oh no, what would be the required down payment? And they have an 800 plus credit score. So I guess a farm stay is like the glam camping thing, I guess. I don't know. Maybe you can expand on that a little bit.
Do you know where this is located?
Nope, that's all I got. Trick
Okay.
question. You got to work with what you
No,
got.
that's okay. If it's if and the reason why I ask is because you kind of mentioned ag, and when I think of ag, I think of USDA.
Yes,
And
that's
with
true.
with community ventures, we have USDA loans. And no, it doesn't mean you have to have cows and chickens. It's not like that. USDA is like an ag loan for those of you who are listening in and watching. If it's outside of Jefferson County, then I would recommend that person reach out to me so that I could get them connected with someone who can talk to them about a USDA loan, because typically the interest rates are lower, the amounts are higher, and I don't want to say it's not as challenging as microloans and other loans, because the USDA is trying to work with people outside in more of the rural areas to help businesses grow.
Yeah, that's a good suggestion, is the USDA. Yeah.
That sounds wonderful. Unfortunately, El Home is a little limited in its ability to do something along those lines. We don't do new construction or land acquisition, but once you do get it built, to get that inside working and all the other amenities that go with it, you can come back and see us.
Yeah.
And this isn't exactly my forte. However, we do have a local team that works with agriculture, specifically farmlands. A lot goes into the weed. They're going to want to know if it's just land, if there's commercial building on there. And that's one of our teams where you're not going to see rates posted anywhere, because they need to see what they're financing, what all you have, and positive to that, they can really adjust their lending rates if they, want what you have. But I don't think many banks will also have that number available, like just a flat rate. They're going to have to look at collateral, what all you bring. And that could potentially mean a really, really good rate for somebody with 800 as well. So do your research. You're unfortunately going to have to connect with a banker each time.
Yeah. Gosh, this hour has slipped by. We're right at the top of the hour. So before we go, though, any last advice you want to give the folks out there, Tracy?
Yes, I would love to. My biggest piece of advice to all business owners, regardless of wanting to pay cash for everything and to have no debt in your business, don't do that. Cash is king. That is my biggest takeaway. Cash is king. Keep that cash and use community ventures money, use L Home money, use US Bank money. Cash is king, because if you pay cash for everything and then you apply for a loan and they look and you have $1,500 and you're like, oh, well, 6 months ago I had 50,000, but I bought this, 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 and this.
Right.
They would have rather seen the $50,000 cash and you come to them and borrow the money to purchase all the equipment that you just used your own money to pay for. So my last piece of advice, cash is king, keep it. Talk to Jenny, talk to Tracy, talk to Jamie.
Jenny, what do you got to say for these folks?
I'm going to end it the same way each time. Please don't be afraid to reach out to any one of us. I have meetings all day where someone just want to bounce ideas off of me. That is my role. I'm your advisor. Just like how you all are asking questions here, feel free to reach out to, I'm pretty sure, Tracy, Jamie, David. None of us would mind. Just if you do have just, all I know is a business name, now what? That's fine. We all act as advisors. We all act as your coach. Any knowledge or wisdom that we can pass on, we'll be happy to. So don't let it deter you. All of these things we were saying, don't let it deter you. Everybody's got to start somewhere.
Right.
What both these ladies said, and then I'll add this too. always write it down. It may seem minuscule, it may seem insignificant, but as you're jotting down ideas about what you want your business to be, especially if you're in the beginnings and the throes of it, those are notes that you can go back to so that you can help fine tune it when it comes to speaking to any one of us. We're here to help guide you, to help you perfect the plan. And also, what I always encourage people to know is that a business plan is a living, breathing document. It is okay for it to morph 3 to 6 to 8 months in because you're just getting started. So what sounded like a freaking fabulous idea today may not exactly pan out as you're in the throes of it. So don't feel like you're trapped in it or that whatever you say you have to do just like that. We're here to help you along the way as you perfect what it is you're trying to do. Also, when it comes to anything that you have, because almost every business is birthed out of someone doing something that they've been doing and then they decided or were advised, you can make money at this. Why don't you do this? So with that in mind, when you're buying things that you do it at every year's craft show or every church event or every outing or whatever it is that you're consistently purchasing, save the receipts. Think about even as simple as making a memo. I spent this much money for a booth, or I spent this much money getting these materials, or even the other side, I made this much money, because those are going to be the beginnings of making your cash flow statements, profit and loss statements, balance sheets at the end of the year. And it's not uncommon to be asked these questions and then go into a freeze mode because you're freaking out. But in fact, you have that information. You just weren't thinking about writing it down. You've been doing what you've been doing. So just get in the habit of starting to journal that information. And then you'll be more than ready when it comes time to speak to any one of us about getting formal with your business. Okay.
Well said. Well said, all of you. So Janet, if you look in the chat, Janet's put everyone's contact info there. You can reach out to everybody. And I will say that, you know, these three experts that we have here have helped thousands of people I know, and people that, you know, businesses that you probably go to and, you know, that started from zero, or businesses that took off and grow. You know, these folks have all had a hand in a lot of that success. So reach out, use the resources that you have, and everyone's happy to help. That's the great thing about our community. So thanks each one of you guys for spending your evening with us, and I know everybody's very appreciative of everything that you've shared tonight. It's been great. It's been a lot of fun. I learned a lot, and I know everybody else did as well. So Janet, thanks for driving the ship for us.
Thanks to all of you again. Thank you very much. I wish everybody a good evening.
Yeah. All right.
Thank
And
you again for having us.
yeah.
And we'll
Thank
get that
you. Be safe.
those handouts to everyone as well. We'll send that
Yeah.
information and the recording to everyone tomorrow.
Excellent.
Yeah.
All right. Thanks, everybody.
you
We'll see you
all.
next week.
All right. Thank you all. Have a wonderful evening.
Thanks, Janet.